Ever wondered what certain life events could trigger a need for tax planning? Well, you're about to find out. Tax planning, simply put, is a strategic approach to managing your taxes. It's a way of ensuring you're not paying more than necessary and making the most of any potential tax benefits. But what triggers the need for tax planning? Well, there's a variety of life events that could necessitate a tax review. For instance, did you owe tax last year, or has your household income changed dramatically? Perhaps you're getting married or divorced, or maybe you have a child heading off to college. Each of these milestones could impact your tax situation. The same goes for small business owners, those planning to sell investments, or individuals experiencing changes in employer-provided benefits. Even major medical expenses or a change of job could trigger a need for tax planning. Stay tuned as we delve into these triggers one by one. So, the first trigger to watch out for is if you owed tax last year. If you haven't adjusted your withholdings, you might be in for a surprise when tax season rolls around. It's time to reassess and plan accordingly. Another trigger is a significant change in your household income. Whether it's a rise or a drop, it's going to impact your taxes, especially when it comes to deductions or credits. Changes in marital status are another big trigger. Whether you're tying the knot or untying it, there are tax benefits and surprises that come with both. Next, if you have kids heading to college next year, you'll want to look into the tax programs available to help offset some of those costs. Owning a small business also has its tax implications, from depreciation benefits to understanding how your business profits impact your personal tax return. And finally, if you're planning on selling investments, you'll want to be aware of the capital gains tax rates, which can range from 0 to 37%. But wait, there's more. Let's continue with the rest of the triggers. Moving on, another key trigger is changes in your employer-provided benefits. Any alterations here could affect your taxable income, so keep a keen eye on those. Next up, consider your residential status. Buying, selling, or even going through a home foreclosure can have significant tax implications, both positive and negative. Major medical expenses can also trigger a need for tax planning. The threshold for itemizing medical deductions is 7.5% of your income, but with the right planning, you can pay these expenses with pre-tax money. Job loss or change is another trigger. Federal unemployment benefits are taxable and should be factored into your tax plan. If your estate hasn't been reviewed in the past 12 months, it's time to do so. New gift and estate tax laws require regular reviews. Lastly, the addition of a new child or dependent can change your tax obligation. These little treasures bring joy and a different tax scenario. Now that we've covered all the triggers, let's talk about what you should do next. So, you've identified one or more triggers from our list that apply to you. What's the next step? Well, the answer is simple but crucial. It's time to schedule a tax planning appointment. Not taking action could lead to an unexpected tax bill that throws your finances off kilter. This isn't about evading taxes, but about making sure you're not paying more than necessary. Remember, taxes can be complex, and the rules change often. Having a professional guide you through the process can help you navigate potential pitfalls and take advantage of benefits you may not even be aware of. Setting up an appointment is easy. Just reach out to GTL Management and we'll guide you through the process. We're here to help you understand and manage your tax obligations so you can focus on what matters most to you. Don't let your tax bill catch you off guard. Schedule your tax planning appointment today and take control of your financial future.